Hello everyone, my name is Parker from the Sire Group Pacific Coast Commercial. This is the National Multifamily update from a BISNOW webinar I just sat through earlier today, and I was making this video and the notes I took for some clients who weren't able to make it, but I thought I'd go ahead and share it with you all today. So let's get into it. So as the pandemic started to where we are now, the government has undoubtedly helped support a lot of tenants, whether it's directly or indirectly, from a direct stimulus check to a PPP loan through their employer, which has helped us to maintain rent collection. And some of my clients have had 100%, some of them have had mid 80s, but overall, and as the panelists said themselves, has been very strong rent collection via the government. However, when that runs dry, that is when we will face more uncertainty on will the employment base be there? Will enough jobs be back in the economy? Will enough people be even allowed to leave their house to go to work to collect their checks for rent? It segues into August 1st. And August 1st is a anticipated deadline as Congress is supposed to create some form of tangible direction in terms of the next round of stimulus. Will unemployment run till January 2021? Will we not have more money in the PPP program? So if you're looking at the underlying financials, you have to consider both scenarios, with and without stimulus, because you don't want to buy something that's propped up on stimulus, and then as soon as it comes time for you to collect the rent, everyone goes, see ya, because they're not getting checks from the government anymore. Schools out till next summer? So the opening of schools actually also has a very significant impact for a variety of reasons, not only for just general consumer confidence, but if you have a two-parent household and they're both earners, but the kids have to stay home because they can't go to school, they probably can't go to any other program, so more than likely one parent will have to sacrifice their job and their income in order to care for the children. And one positive might be that might help distribute work opportunities through the workforce. However, I think it's rather inefficient to basically have people trading out jobs, and the employees are not as good as their jobs because they haven't gone through the onboarding process yet. But the opening of schools actually has a very significant impact on not only the office market, obviously, but retail and multifamily. Because also it affects, they have to. If one parent can't go to work and now their income goes down, now they can't buy a house because they qualify for half the loan they used to have. So now renting becomes a more attractive option. But unit design moving forward, what do developers and investors have to provide to the marketplace for tenants, me such as myself, to really find value? And within the unit design, there was probably taking a step back, is how I'd say it, from the push towards the micro unit concept. Now, to see more value, tenants need enough space not only for just a living room and a kitchen, but the home office. Work from home is a very real thing now, and people that are able to reposition or repurpose spaces to not just, for example, my room is just one large rectangle, and I have no separation of space, and it's not a very clear work-life balance. And what that plays into also is amenity space. Co-working as an amenity now, I think, is going to be really strong. I think, WeWork proved that co-working is not very profitable, but it's a better incentive for a apartment owner to have it on site than it is for a private company to try to run it. Just when it comes to the apartment owner could take the slight loss on the amenity itself, knowing that it will help reduce their vacancy. And I think, for example, if you had a 100-unit complex and you had difficulties filling the last 10%, maybe 5 of those units, if they're contiguous, should be demoed and made into a co-working space. And now you don't have to worry. Yes, you are losing that income. However, you probably weren't going to have those filled anyway without giving large concessions due to the supply-demand imbalance in the market. But ultimately, at the end of the day, the tenant is going to feel more justified in making that higher payment, which is your per square foot payment, that ultimately the owner is going to need for their bottom line and to keep the bank happy. Times always result in good innovation, whether it's 2008 or now. And this can be seen with virtual leasing, virtual management, and virtual rent payments. For the virtual leasing, or virtual tours, as they say, it's a lot of different things come out of that, because it's one, just the amount of contact on-site staff needed. But then also you have to consider the fact that there's owners and operators that are signing leases without ever coming into contact at all. And to me, when I see that as such a such a signal of a strong underlying economy where me as a renter could walk through a place and I don't need a leasing agent to try to sell it to me. You know, I walk in and I see the value myself. And I don't know what more you can ask for in an economy like that. Well, while we're in a pandemic, people are leasing stuff up and they're making the decision themselves that they think it's worth it. And there's also a lot of pluses. Some people prefer the virtual tour because the leasing agent, although it in theory is supposed to help, actually would hurt because they feel pressured and they don't feel that them, their partner, their roommates, while touring a space, have the freedom to sort of share their mind and truly make sure that they're not, you know, hiding something back or don't feel comfortable expressing how they feel. So you can't discuss multifamily without discussing affordability. And I think an unfortunate result of the coronavirus is going to be a decrease in the supply of affordable housing. It's just development paused or stopped when this first happened, and you can't really make that time back up. With the difficult regulatory environment a lot of affordable housing developers face, the odds are stacked against them to be able to bring that supply in quick enough. And unfortunately, the demand has never been higher now, but the supply will also be lower and probably the lowest it's been in the past few decades. And looking forward, kind of putting all this together, I think the apartment market is actually going to remain very strong. You know, you have people that have either lost their jobs or now have a level of job insecurity that they didn't have last year, which I think is going to lead a lot of people to hold back from making that purchase because they don't want to lose their initial investment 1 to 2 years in just because the job market isn't there, or a company has found, you know, from this whole work from home process, they've discovered areas of efficiency they didn't realize, in which case they're going to be able to reduce their number of employees down because the unfortunate times and the difficulty they've gone through has led them to the experience of discovering how can they really transform their business model. Obviously, I think the C-class apartment building will have a lower vacancy rate than the A-class, not to mention, or not for the A and B properties to not recognize that a slight capital expenditure would allow them to reposition to, like I said earlier, the co-working office space, embracing that, knowing your tenants are going to spend more time in your building and having that internal dialogue to figure out what can we do to provide them something to add real value. You know, some people are going to completely fail at this opportunity. Some people will not change. Other operators and developers will see this and they will be shocked with the absorption rate that they're going to have when a owner developer is able to provide some of these amenities to, again, justify the value in the rent. People, the underlying economy is still there. We're in a health crisis, not a financial crisis. And if you're able to justify the value, the economy is strong. It was just as strong as it was now. People want to go out and they want to spend money. The government's just literally not allowing them to. Thank you for watching. You've made it to the end of the video. I really appreciate the support. I hope to make more informational videos like this, not only for my clients, but also for the general public. And again, my name is Parker. I'm from the Sire Group of Pacific Coast Commercial, and my contact information should be somewhere on this screen. Thank you. Bye.